I want to welcome up to the stage the woman with the best name at the conference. Everyone welcome Shiloe Bear. This is one of my Twitter friends. We met on Twitter. Love the get up here.
This is my version of the red pantsuit.
Oh, there we go. Okay, this is going to be fascinating.
I'm ready.
You're ready?
I'm ready.
So Shiloh and I met on Twitter, and then we met at an event in New York City.
That's right.
And there were very few women at the event in New York City. In fact, the next day, all of us went to breakfast. That's how few women.
Maybe 300 men and 8 women.
Yeah. And Natasha and I had a discussion about raising money. And she's going to tell you a little bit about what she does. But today it's going to be how she wasn't able to raise the money for a deal. Because that's a very interesting story. But before you get there, can you tell everyone where you're from, what you do, and oh, by the way, the young woman that's living with you.
Oh, yes. I will tell you everything about my whole life. I am from a very small town in Oklahoma. It's about 300 people on the Arkansas border. Super rural. I live in the San Francisco Bay Area now. And my first job, I was 14 years old. I was working as a dishwasher. And I was like 2 weeks in, and I was like, I am going to be a line cook. I'm just always trying to see what the next thing is.
Okay, yeah, so you wanted to go from dishwasher to line cook.
Yeah.
That was thinking big.
Yeah, and every step of the way, I'm just like, what is the next thing? What is the next thing? And that served me really well. And now I'm here. I work in the Bay Area. I run a firm that does industrial repositioning.
What does that mean?
That means we take really funky old warehouses that are usually in terrible condition and try to find a much higher and better use for them. They're in too good of a neighborhood for what they're doing anymore, and so we're taking them and often converting to research, biotech, R&D space, labs. We've also done a fair amount of industrial to multifamily, which is like lofts, think live-work lofts. And yeah, but we're generally looking for things that are between 10 and 50,000 feet.
What was your background to get into this? The line cook part.
Right, yes. I went to college for engineering, but I actually came to real estate through the trades. So I worked one job in engineering and was like, holy cow, this is not for me. And yeah, after that I tried a whole bunch of different things. One of those was I took a cabinet making class. And I was like, okay, this is it. I'm used to using my hands. I like being a little scrappy. I like the kind of real world elements of it. And so I got a job as a cabinet maker. That cabinet shop got bought by a construction company, and I came up through working in construction and construction management.
Fascinating.
Thank you.
When did we start the investment journey?
I bought my first multifamily building when I was in my 20s because I couldn't buy in the Bay Area, so I bought an 8-unit building in Oklahoma City that I was managing remotely. I was also an apartment manager at a 26-unit building in addition to my full-time job. So I was like a resident manager, I was working full-time as a construction manager, and I was buying this multifamily. But that's my side hustle, my real industrial repositioning started in about 2016. That's when I started my firm. At that time, I was buying land and entitling land and selling it with entitlements because I didn't have any money, and I didn't come from money by any stretch. And so I was just trying to figure out a way to get into real estate in the Bay Area where prices are notoriously high, but at that time I was able to I bought my first piece of land. It was $12,000 total. It was like $270 a foot. And I entitled it for multifamily and sold it for about $30,000 a unit. So not a huge jump, and it takes some time, but enough of those, and I started to accumulate little $50,000, $100,000 chunks that I was able to put toward bigger stuff.
So the plan was, I'm going to go entitle some stuff and get paid the upside on that.
Exactly.
Okay, so you accumulate a few $100,000, and you're in the big leagues now.
Right.
Right?
Now I've made it.
Now what?
So I was doing fee development, and I still do a bunch of fee development, which means you're doing development on behalf of another developer, often for a fee, and I started trying to roll that fee into the equity. So
That's great.
Yeah, so everyone that I could, I would, if they were open to that, I would say, like, in place of my fee, I'll put it into the building.
I try to get architects to do that, but they want too much equity.
Exactly.
Like, I'd rather just pay them, but
right.
Yeah. Okay, so that, how many times did people take you up on that?
I've done that probably, I think I have about a dozen right now.
That's amazing.
Yeah, thank you. Thank you. It's very small, but like lots of tiny pieces of pie is still pie. I'm happy with it. Yeah, I like pie.
So I do too. Banana cream is my favorite.
Yes.
Can you tell us, to give us some reference, what would a typical fee be, and then how, is it just pari passu? Like if a fee is 20 grand, do you get 20 grand of equity?
Not exactly. We're usually taking a little bit of a cut for taking it in equity. And often we're coming in very early, so it's hard to know. We're doing the due diligence. They're closing out the deal. We're just saying we're going to assume we're going to end up billing you guys 200 grand over the course of the next 3 years on this thing. And so we're going to put 100 in, and they'll give us that at 80K of equity. So it's not a direct translation.
So they'll still pay you 100 grand because you need to get paid and you need to pay your people.
Yes.
But I'll take maybe the house cut and put it into the deal.
Exactly.
How many of those deals did you do work on that you never got equity on because the deals fell apart?
Oh, at least, 4 or 5. Yeah.
But that didn't dissuade you from continuing the path?
No.
Okay.
No.
Very smart.
There's a lot. I do a lot of work for free, but I get paid a lot for the stuff that I get paid on, so it all evens out.
So you're in 12 of those.
Yes.
And when do we see a paycheck on those 12?
Those are tough because most of the developers that I work with are long-term holders. So they're not selling and they're not cashing out. They're not refi. Yeah. So those are going to be.
That's painful.
It is, but it's also fine. It's like I'm planning to live a long time.
Forced savings.
So, yeah.
Okay, so forced savings, right?
Yes.
Okay.
Yes.
You want to talk about the deal that should or could or didn't?
Sure.
Or?
Yeah, so I tried to raise a deal, one of the first ones that I tried to do entirely on my own. So most of the buildings that I look at require all equity. As I said, they're in very bad condition, often have no tenants, many have squatters. There's like lots of issues. So they're not financeable typically until they're stabilized. And so I was trying to I have someone in my office that just looks for off-market deals. So this was one that we have found. It was about $3 million all in. Sorry, $3 million. We were going to put another $1 million in to bring it up and stabilize it. And so we were trying to raise like 4.5. And fundraising is really hard. For those of you who haven't done it, maybe it's not hard for everyone. It's really hard for me. You are just asking people for money, which is a very vulnerable thing. But then also, you're just collecting jars of no's. I just literally had a jar on my desk, and I was just like, if this jar fills up with all of my no's, I will get some yeses. And like the last presenter said, like the day that someone says yes to you, it's just like all of it washes away, and you're like, okay, I might actually make it. And so I probably had, I don't know, around 100 meetings with people. Some of them I had to meet multiple times to get $50,000 check. And mind you, I'm trying to raise $4 million, and
Was this the first time that you tried to raise that much? Had you raised money in the past, or was this the first time you fundraised?
No, that was my first bid out. Because in the Bay Area, you can't really, that's the low end, right? That's like the cheapest thing I could buy.
So how many people tried to dissuade you before you even started?
Actually, I feel like there are a lot of people who were pushing me to it because I work with a lot of developers. And so they're always telling me how much money I make them, which is a good thing for me. It's painful, but it's good.
Is there ever like a percentage rent deal there? Like where if they make so much more, you get a percentage? No.
I haven't done that, but I like it. I like the way you think.
Yeah.
We're going to talk.
Yeah.
Yeah, I ended up, so it was very long. I fortunately had it in contract for a long time. I got to the point where I had raised almost all of it. I was at like 4-ish. And so I felt okay, deposit went hard. Interest rates started getting wonky. Stock market was getting really wonky. A couple of my investors pulled out. I kept trying to raise. Everybody signed investor docs. I was ready to close. 2 of the people that signed investor docs did not fund. I ended up about $350,000 short. And I lost a deposit, 50 or so thousand in environmental reports, 6 months of heartache, stress.
How much was the deposit?
100,000.
So you lost 150 plus time and work.
Yeah, and a little damage to my marriage, I think. Yeah, it was intense. It was intense. Like, honestly, it was a big miss. And I never really thought it was going to fail until the day it did. And so I didn't really see it coming, which sounds weird, I know, but I'm very optimistic.
When was that?
That was 2 years ago.
Have you tried again?
More or less. What I realized was that, A, I didn't know enough people. I didn't know enough of the right people. B, I really needed more time. I need to have the kind of deal that I can really
How much
take my
time did you have?
In that one, I had 3 months and I extended it to 4.
Yeah.
So that's tight. That's a tight timeline.
I learned this term 2 weeks ago. I love it. What was your Rolodex capital when you started? How many people? Did you have 50 you went out to?
I had about 50 that I went out to. And that's the other thing. A lot of the guys that I would talk to, I was like, how did you raise your first deal? And they're like, I had these friends from Andover, and then we all went to Yale together, and then they were in the stock market with me on Wall Street. And I'm just like, okay, if you don't have that, then what? And they're like,
Right.
I don't know.
Thanks.
Yeah, so for me, it was like the guy that runs the plumbing company that I work with. It was like people that I know in real life that I've done a bunch of work with who don't ever get asked to be in deals.
And then won five meetings.
Yeah, yeah.
right.
Well, some of them did. Some were like, it became like friends of friends. So, okay, if you're not willing to invest, can you introduce me to anyone? Is there anyone that you know that would be interested in this deal, and can I meet them? So I got really comfortable with that phrase.
So I don't have enough people in my Rolodex capital.
Right.
I needed more due diligence time. Other lessons or things you would do differently?
Let me see. I think having a little more flexibility around the financing. So everything I'm focused on right now has some component of seller financing because things aren't really transacting in my market. So we have a lot more power, which is good too. We're just in a better space for raising right now. So I have 2 deals I'm working on. One is 50,000 square foot that would be a conversion to multifamily. Everybody was like, go a little smaller. I'm like, why not bigger? I don't know.
Think bigger. Dr. Hudson, think bigger.
And then one is like a 12,000 square foot that would be a biotech conversion. So what I found is a lot of people they don't understand biotech. They don't understand labs. So even though the returns are great, people just don't get it. And I can't be educating everyone out here. So the multifamily they understand that. So I think if we do a couple deals that make sense to people, then I can start to sell them a little bit more on the biotech stuff.
Who would know about the biotech?
Scientists know.
Do they have money?
They do.
We got to figure out.
We got
to get
I
to
know.
that pool.
I know.
There's got to be a conference with scientists that have money.
There's a lot of money in the Bay Area. They're
Jessica,
all
you
the
know
tech people.
a conference where scientists have money? Florida.
That's where we're going next.
This is why we have this group.
I'll see you guys later.
So are you currently raising money for those 2 deals right now?
One of them, I'm still working with the seller. He started off at 14. Then I went back to him and he was at 10. Then he was at 7. Right now we're at 5 million.
14 to 5. Welcome to San Francisco.
I'm working him.
Yeah.
Yeah, but that's what's been happening. This is 2 years. So that's what the market looks like in 2 years.
Like the high-rise office building in downtown San Fran that sold for $280
Yeah.
just sold for $30. I believe in San Francisco. I think it's going to come back.
When you're there, I'm telling you, the sun is shining, the birds are chirping. It is not all doom and gloom, but keep telling the stories because it's working for
Right,
us,
exactly.
Right? That's helping me. Please.
Okay, let's say I want to invest in the multifamily. What's your promote and pref? Do you do that?
Right now, we're looking at an 8 pref over a 30.
30 to you?
30 promote.
70 to me.
And you get paid first.
So not 86-17.
No.
And not 50-50.
No.
I like your numbers.
Yeah.
Awesome.
Yeah, my last deal was 80-20, and everybody said that was too generous to the investors and that it made people suspicious. So I was like, all right, I'll take more.
We'll take more.
That's fine.
But of course, we don't get paid until they get paid.
That's
Absolutely.
Right. That's right.
So how much are you needing for the multifamily, and how much have you raised?
I've been soft raising it because I don't have.
Because you don't have the deal yet.
I don't have the deal yet because I'm still trying to get the price down because I'm a cheapskate. But right now, what I'll be raising is something like 8 million all in,
because
building,
of the
building plus construction. Yeah, I might get some debt on some of it because people will fund multifamily. I've probably got about 4.5, 5 right now, more or less. committed, but
How much of the 8 can you get a loan on?
I don't trust the commitments anymore.
Right, you learned that, right?
I did. I learned that really, that's a good lesson. If you need to raise 5, you actually need to raise 7.
So, Aaron, have you ever had anyone not put in money that said they were going to? Last week. Not me, I wired my money. Okay, you have also had people say that? Yep. Wow. That's never happened to me yet. Oh yeah, for sure. Okay, wow, yeah.
Yeah.
So you gotta overraise.
You got to overraise, yeah, which I really did not factor in, so that's the lesson.
Do you have children?
We're foster parents, so I have a 13-year-old right now who's been with me for a little while.
And have you fostered before?
Yes. Yeah. Okay, but she's a great kid. She's just testing me in every way, but she's great.
Like a
Like a true
13-year-old?
13-year-old. I'm like, you have a future in negotiation. I'm like, I'm bringing you to the table. She's going to go talk to the guy that has the deal. Yeah.
Yeah, she's gonna get the $4 million,
4
down
million,
to 2.
and we're going to be at 3.
Yeah. So advice to folks that want to, like your advice for them to raise money, I think is, because we learn, like the thing that we just talked about between Aaron, Natasha, and you, that's never happened to me.
Right.
So I don't have that lesson. You all have that lesson. Like I would never think to oversubscribe because I would be worried I'm going to have to tell people I'm giving you your money back. I don't want to do that.
Yeah.
I would never do that, but I didn't learn the lesson yet. I'm sure I'm going to learn the lesson one day, but you all have learned a lesson. So what lessons from this tragedy, and again, we're talking first world here, but this uncomfortable thing that you went through, could you tell, what are the do's and the don'ts?
I think, first of all, you have to always be raising. You have to just be,
I have an Evernote in my phone.
Yeah.
Do you have an Evernote in your phone? Mm-hmm. Yeah. Mm-hmm. Every time someone comes up, and again, 50% of those people, when it comes to the time,
right,
they're not really interested.
Right.
But many are.
The thing that's helped me the most, I think, and I should do this more, is talking about what I do more publicly, which is hard for me. I'm a pretty private person, and I'm very modest, and so the idea of being like, look at all this amazing stuff I do.
You could do a conference.
Right, yeah, right? So the more that I talk about it and talk about my strategy and my philosophy around investing, the more that people find me, which is much, much easier, because then I'm not trying to convince them of who I am, what I do, what I'm trying to build. If I can just get my name out there a little bit more, then people come to me and say, I know who you are, I know what you build, I know what you're trying to do, I know your philosophy, and I support it. And that's really
Is that why you got on Twitter?
I actually got on Twitter because I was looking for peers. It was when that deal was falling apart. I was feeling really lost and really alone and just feeling, has anyone ever experienced this before? Because I didn't know anyone who was trying to do what I did. I knew people who are much bigger, who raise at like an institutional level, and I know a couple guys who flip houses. So I was looking for peers, mostly.
Did you find them?
I did find them. Yeah, I found a really great crew of people that I love to death. So the fundraising through Twitter is just like a byproduct, but that has helped. I have a little link in my bio, and you can put in your email, and then it asks you if you're accredited and some other stuff, and then that goes into our database, and then when we get a deal, that goes out to everybody.
Reconvene.
Reconvene, yeah.
So there's this other conference called Reconvene, and is he a friend of yours? He's not a friend of mine yet, but...
Moses?
Yeah.
Yeah, Moses is great. He's a good friend.
So tell them about Reconvene.
So Reconvene is a conference in Southern California every September, more or less. It was formed out of a group and it's just like a lot of people who really support each other. It's actually one of the rare, very positive little corners of the internet. Yeah, people just really try to help each other, and you can ask questions, and like people will help you solve them.
And it's a day and a half, or?
Yeah, Reconvene is a day and a half.
And they really want women this year?
Mm-hmm. It's a good event.
And you've been once or twice?
I've been twice.
So it's a very high ticket?
Yes.
7,000?
Expensive.
7,000.
Yeah.
One of our friends, Strip Mall Guy, those of you that are on Twitter, in one event raised over $5 million, right? Mm-hmm. Moses is going to send me a letter next week to send out to this group to give a discount for anyone that wants to attend that conference.
Nice.
And I said it needs to be a significant discount.
Yeah.
But they want women. He needs women. So I said, I'll bring them, but you gotta, we're not paying that. So when you get, I need the 13-year-old to help me negotiate that too.
Oh,
But when you get the letter, I'm going to send it. It's going to come from me, but you're going to see it's Moses Kagan. This is a conference in September that I will be attending.
I'll be there.
You will be attending. Natasha will be attending. Alex, are you attending? Jessica, so many of us will be there. Don't buy your ticket yet until you get this letter from Moses. But I've heard it's a phenomenal conference.
It's good. Yeah, it's good. There are speakers, but there's just a lot of time to connect with people and a lot of big players.
Yeah. How'd you do? You were a little nervous?
I was a little nervous.
Did she do amazing? All right.
Thank you, guys.
At dinner last night, they're like, are you giving us a list of questions? I'm like, no, I don't know where the conversation is going to go.
No, please come talk to me.
Do you have a breakout?
Yeah, I do have a breakout. I will tell you, like very early in my career, I was very motivated by money. Money was like the reason I was doing this. I think because I didn't come from anything, and that's like the scarcity mindset. And what I have learned is that money will not heal you, and you can't earn your way to self-respect. My motivation now is bringing people up and helping other people, much like you do. It's a big part of what I do. So.
Awesome. Thank you, Shiloh.
Come talk to me.
Like nobody's been down. She murdered.